Companies from supermarket giant Coles to iron ore miner Fortescue warn that rising costs are here to stay, heaping more pressure on the government and Reserve Bank. The local share market surges after a couple of very bad sessions, and Barbie is back in fashion. It's Friday, the 29th of April 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Adam Lang, filling in for Michael Thompson, and good morning to you, Sean Aylmer.
Good morning, Adam. Did Barbie back in fashion? Was Barbie ever out of fashion?
Not to me, Sean.
No, not to my kids, certainly. Nice to hear you too, Adam. Michael's off at his brother's wedding. I hope it goes well. I hope the wedding goes well, and I hope Michael's speech goes well too.
We'll find out as soon as he gets back, perhaps even fodder for the Safe Word program. But let's get on with it. Immediately after the show, stay listening for Sean's chat to Daniel West from MYOB Australia. And the main story this morning, supermarket giant Coles has warned that food prices are rising, and that's going to continue.
Yes, Adam. Coles boss Stephen Kane said while Coles was doing a better job than its rivals keeping food inflation to 3.3% during the March quarter, the lengthy process of negotiating with suppliers on prices was only just getting started. So price rises were at an early stage, and there's more to come. Prices along the whole supply chain are rising. Commodity prices, raw material prices, packaging costs, energy costs, transport expenses. It means suppliers are asking Coles to lift their retail prices. Kane expects price pressures will continue not only this year, but well into 2023. Now, it's not the only retailer feeling the pinch. Marley Spoon, the home meal kits company, came out yesterday and said it will lift prices by 6%. And away from retailing, the miners are having a hard time of it, which I'll talk about more of in a moment.
Sean, of course, this feeds into the debate around interest rates and whether the Reserve Bank will lift the official cash rate next week.
That's right. The consensus view is that rates will rise on Tuesday when the Reserve Bank board meets after a very strong March quarter inflation figure on Wednesday. What Kane from Coles is saying, is that those pressures are baked into the system. And if he's right, and I suspect he is, we're going to need a bunch of interest rate rises later this year.
Okay, so at its heart, is this still a COVID story?
Largely, yes. Labour shortages across the economy are a genuine problem. Border closures have hurt businesses. Absenteeism is rife. But there's more to it now. The war in Ukraine is hitting global food prices and, more importantly, energy prices. Remember, that region is a major producer of wheat and a major exporter of oil and gas. The floods along the east coast of Australia and South Australia in February have also added to price pressures. So there's more going on than COVID now.
So this is great information for us, Sean. Forewarned is forearmed. But was there any good news in the Coles quarterly result?
Oh, good news. We don't do that on Fear and Greed.
Come on, just a bit.
Well, no, look, the result was pretty solid for shareholders, actually. Coles did pretty well. And the prices of bananas are down around 26%. I think avos were down about 30%. So there's some good news, Adam.
Some wins.
Some wins, that's right. Kane said to address some of the looming price pressures, Coles will push more home brands into aisles. They tend to be cheaper. That's good news too. And at least for Coles shareholders, shoppers are returning to big supermarkets, having spent much time in neighbourhood outlets during COVID. So yes, there was some good news out of it.
Yeah, so very good news for shareholders and some really interesting information about what's ahead of us. So beyond that, what happened on the local share market yesterday?
Well, the S&P ASX 200 finished the day up 1.3% to 7,357 points. A very strong day after a couple of shockers, which had wiped out more than 5%. The material sector led the way. The country's largest company, BHP, jumped 4.3%. Now, when BHP jumps 4.3%, the ASX rises. Fortescue did well and Rio Tinto rose 3.5%. Diversified miner South32 and ASX Limited were both up more than 3%, while CSL and Macquarie Group rose more than 1%. The healthcare and tech stocks were among the worst performers yesterday. Adam, more economists are bringing forward their forecasts of a rate rise on Tuesday next week when the Reserve Bank board meets. In fact, the bond market has now priced in a 100% chance of an increase in the official cash rate next week. That is probably a little too strong, but I think everyone now agrees that the bank will move next week. In global markets, the Aussie dollar is worth 71 US cents. That's because the greenback keeps getting stronger. A barrel of Brent crude is trading just above 100 US dollars, and gold has fallen back below 1900 US dollars an ounce. And just quickly, it's not a bad time to visit Japan. It's spring, think cherry blossoms, and also the yen, the currency, has hit a multi-decade low, with the Bank of Japan yesterday saying it would keep market interest rates down, very much going against the global trend.
Sean, did you know I used to live in Japan as a child?
Did you?
I did, and I've never been back. You've just given me a great reason to consider it again. Great country. Now, we'll be back in a moment with the rest of the day's business news. The economy took centre stage in the election campaign yesterday.
Yes, and it's all about inflation. We were just talking about Coles and what its boss Stephen Kane had to say. It's that commentary that's making things tough for the coalition, which has pushed itself as the better economic manager. Prime Minister Scott Morrison said higher domestic inflation was not homegrown, and he denied that government spending during the pandemic overheated the economy. Treasurer Josh Frydenberg said Australia was no different to the rest of the world, and former Prime Minister John Howard was campaigning, saying higher inflation showed why voters should opt for the coalition. For its part, Labor called on the government to think more about the cost of living, and it said it would drive inflation lower through increasing skills and participation in the labour market. Labor continued its push on rising childcare fees specifically.
Sean, for anyone who's followed Fear and Greed for some time, interest rate rises being considered is not a surprise. And really, in terms of the election, any government around the world is grappling with these challenges. But it's interesting to hear that perspective coming through in the campaign. Away from the economy, what were the polls saying?
Well, really, yesterday there was plenty of chat, and probably misinformation, about potential preference deals. Tasmanian Senator Jackie Lambie rejected suggestions the Jackie Lambie network had struck a dirty deal with the Libs to win an extra seat, and Prime Minister Scott Morrison dismissed media reports that Pauline Hanson will preference Labor over several of the coalition's most vulnerable candidates. In terms of policies, Adam, you know that old chestnut, policies?
Oh, please. Were they?
Yeah. Well, just briefly, not much, but I'll tell you. Labor said it would create a $1.2 billion defence research agency to deliver national security technology breakthroughs with AUKUS, which is the partnership between Australia, the US and Britain.
That's interesting. Now, away from that, Fortescue Metals' share price jumped 8% yesterday after raising its iron ore export target.
After 3 months of solid production, Fortescue said it's on track for its third consecutive year of record exports. That's somewhere between 180 and 185 million tonnes. It's really hard to get your mind around how much that is. Obviously, it's good news for the iron ore miner, which actually hasn't had such a good time of it recently. Even after yesterday's big rise, its share price is still down about 5% over the past year. One worrying comment was that production and construction costs are surging. Fortescue also revealed a further blowout in its Iron Bridge magnetite project. It's becoming a really familiar story in the mining sector. Gold producer Silver Lake's share price tumbled 11% on opening yesterday after telling investors that staffing pressures and costs would eat into its bottom line. Another gold digger, Regis Resources, said COVID-related and more general labour shortages had slowed progress at one of its mines, sending its share price 1% lower. Lithium group Pilbara Minerals warned that production had fallen in part linked to staffing pressures. The cost hikes reflect higher labour costs and shortages of people, as well as rising transport costs and supply chain challenges. The Western Australia border closures added to the complexity of finding staff. Miners are really struggling to manage their businesses at the moment.
Sean, and in the end, we're talking about mining here, but rising labour costs, shortages of people, it just feels like there's more pervasive pressure on cost of living, doesn't it?
Yeah, absolutely.
AMP has sold off another part of the funds management business, pushing its share up 13%.
Yes, good news for shareholders of that once iconic company. Yesterday, AMP said it had sold its international infrastructure business. That follows the sale on Wednesday of the infrastructure equity business, along with the real estate funds management group. It means that AMP's funds management arm, which used to be known as AMP Capital, has now been completely sold off for a total consideration of somewhere between $2 and $2.5 billion. AMP share price jumped 13% yesterday, as you mentioned, to its highest level since November last year.
Sean, this has been an incredible story with AMP over recent years. Where do you think this will end up closing off?
Oh, well, I think, AMP is now a much smaller business. It will trade. It's not a top 100 company anymore. AMP Capital, they've now disposed of that. So, hopefully for the AMP shareholders, they can build a business around its banking and financial services products and things will go on. Certainly, or what's happened over the last couple of years, that should be over now. It's got a new board, new CEO, new business, really. So hopefully it does well.
And the name lives on. Let's hope it does.
And the name lives on. That's right.
It emerged yesterday that Victorian Premier Daniel Andrews was questioned by the state's anti-corruption authority.
Yes, and he wouldn't answer questions about exactly what he said. The Age newspaper reported that the Premier was interviewed as part of an investigation into Victorian Labor's culture. Mr. Andrews said he didn't want to say anything until the final report was handed down.
We'll stay tuned for that then. Moving on, it's surprising how much COVID has slipped off the radar, particularly given we're in an election campaign. It actually doesn't seem to be getting much of a run at the moment, but there's still plenty of cases.
It's a really good point, Adam. Maybe we're really learning to live with COVID. As you say, case numbers certainly remain elevated. New South Wales yesterday reported 13,800 cases and Victoria reported 10,700 infections. I'd hazard a guess those numbers are way, way below what the real numbers are, given people that test positive on a rapid antigen test need to inform authorities. I'm sure many don't. Queensland reported 7,700 new infections. Western Australia was at almost 9,000 and South Australia announced 3,700 cases. Tasmania came in at 1,200 infections.
They're still big numbers, but I agree with you. It really does feel like we're just learning to live with it.
It's probably the way it should be. And as we're seeing in China at the moment where they're not learning to live with it, causes real problems.
Yeah, or indeed America and Europe where they're really living beyond it.
Yeah. True.
Moving on to Telstra, they've announced they'll spend $50 million to buy a majority stake in the set-top box provider Fetch TV.
Yes, it will push along Telstra's existing TV platform. Fetch currently has about 670,000 subscribers. Telstra's got around 800 subscribers. Put it together, you've got a decent business.
That's really interesting because amongst the battle for Netflix, and we've heard you talk about that recently with their subscriber numbers, admittedly incredibly high, but dropping 200,000 recently, there is a battle between all of the streaming providers. And this battle for real estate, including Fetch TV, I think is really interesting.
Yeah, I agree.
Now, retailer Adore Beauty said March quarter revenue rose 9%.
Yes, and active customers jumped to 880,000. Adore's really had a hard time of it since listing in late 2020. Since then, its share price has gone from close to $7 to yesterday's close of $1.66. It really has tumbled.
Well, let's see how that continues to perform. And Sean, staying in the world of retail and now with luxury goods, Cettire is in that camp as well.
Yeah, it was a very hot stock after it listed in December 2020, up more than 800% in less than a year. But the end of the pandemic hasn't been kind to Cettire. Yesterday, it said revenues were up sharply for the March quarter, but that couldn't prevent a 6% slide. Its share price is now heading back to where it started nearly 17 months ago.
Isn't that interesting that the COVID lockdowns break free and the demand for luxury goes down?
Yeah, that's true. Maybe online luxury rather than physical luxury.
That's a really good point. So moving on to overseas news, US President Joe Biden has invited whoever wins the Australian election on May 21 to travel to Tokyo for a meeting of the Quadrilateral Security Dialogue.
Yes, the meeting's on May 24, so we'd better hope that we get a result fairly quickly, really.
Yes.
Mr. Biden is travelling to Tokyo and wants to meet the leaders of the Quad nations, India, Japan and Australia. The meeting is to keep pushing US alliances in the Indo-Pacific region, particularly with Japan and Korea. I'm just not sure it's a great look for the newly elected PM, whether that be Scott Morrison or Anthony Albanese, to leave the country 2 days or even maybe 36 hours after the poll, no matter what the reason.
Yeah, thanks for the votes. I'm off for a bit.
Exactly.
Turning to something a lot more serious, Sean, trying to stop the war in Ukraine versus keeping the lights on, that's what some European countries are now facing.
That's right. The Financial Times is reporting that some of Europe's largest energy companies are making arrangements to comply with a new payment system for Russian gas demanded by Vladimir Putin, but one which critics say undercuts the effect of sanctions and delivers billions of dollars in cash to Moscow. Gas distributors in Germany, Austria, Hungary and Slovakia, and potentially Italy, are opening ruble accounts with Russia's state-controlled gas supplier so as to pay for gas supplies. It will provide Russia with billions of dollars in cash and much, much greater economic security. It will provide Europe with a more secure gas supply, but it certainly doesn't do anything to end the war.
There are so many interesting elements to this conflict, Sean. It really becomes so pervasive, doesn't it, in the discussions we're having?
It sure does. It's everywhere.
Now, also, toy maker Mattel has reported strong earnings, and there's a fair bit of private equity interest in that group.
Yes, Barbie and Ken, I presume they're still sold. I'm going to say they are. Barbie and Ken are in demand. Mattel has struggled for much of the past decade, but over the past couple of years, it's been a great turnaround story and it's profitable again. It shed about 1/3 of its workforce and revamped its manufacturing processes. Yesterday, it reported its strongest first quarter of the year on record. And now there are media reports saying that private equity firms have held talks with the toy maker. It's a storied company. We all know about it. Barbie, Hot Wheels, the Fisher-Price brand is part of Mattel. They're kind of staples of growing up. More recently, it's pushed its brand into films and television. Adam, you'll be pleased to know that there's a new Barbie film coming out with Aussie actress Margot Robbie.
Is that right?
Yes. And now it's once again a very hot stock. After its results announcement yesterday morning, its share price jumped 11%.
Up next is the Fear and Greed daily interview with Daniel West from MYOB Australia. Sean, what did you cover with Daniel?
Oh, we had a great chat about, it's very much the nuts and bolts of how data, what data is, how you can use data to help your business, and particularly for small businesses. Daniel kind of gave us a 101 on what small businesses and medium-sized businesses should be doing with data, how they manage it, how they integrate systems, that type of thing to improve their business. Well worth a listen, Adam.
Well, I will be listening. Small business, medium business, large business, power of data. That's plenty in it for me. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Adam.
It's Friday, the 29th of April, 2022. Make sure you're following the podcast. Join us on LinkedIn, Twitter and Facebook. I'm Adam Lang, and that was Fear and Greed. Have a great day.